Welcome. This is Tax Pro Nation, the home of the independent tax professionals, where you can find a tax community, maximize your earnings, and live life on your own terms. I'm your host, Imelda Ledesma, COO of Pronto Tax School. In this episode, Andy and Andrea will lead the conversation about the issues with business clients that do not have their accounting completed. What do? Do you do their accounting or do you refer them to someone else? The harsh reality of cleaning up accounting for your clients.
All right, Andy, I am perfectly capable of filling the open air with idle chit chat. So it's been great.
Nice. Hey guys, sorry I'm a couple minutes late here. I got sucked into this portal about the new child tax credit potential changes. Has anybody gone down that rabbit hole?
I started, but
I just looked at the very high level. Refundable credit goes up from $1,600 to $1,800, and then I stopped reading.
Yeah. All right. Well, I went down the rabbit hole. I'm going to send an email in a little bit, giving you the short version of the rabbit hole. I try to actually not talk about things that might happen because they seem to always change or not happen or whatever. But I know, I don't know if you're hearing clients' questions about this because we're seeing a lot of people like posting on social and TikToks and different things. It seems to be like an area that clients have a lot of questions about. Are you guys seeing that as well?
I am.
okay. Yes, seen that.
Okay.
I am too.
Yeah, and speaking of questions, Andrea, we had a pretty lively, I thought it was lively on Wednesday, a good session with Payosha where she was kind of like, it was an interesting discussion between like the process document that, we've been working on and kind of like colliding with the real world of clients and how to navigate, that bridge, between ideal, this is my process, but then here's my reality. So I think that's definitely a big thing when dealing with business clients. And sort of what I wanted to ask you to kick off today's discussion is for clients that are not doing their accounting and they have an entity return, and let's just focus on S corporations because that's the most common entity return just in general, right? So they're not doing their accounting, and they come to you to do their taxes. Like Payosha was sharing about how she had hired somebody to build this like customized spreadsheet that was like for people that aren't doing their accounting. Then on the other side, you have like, hey, you're not doing your accounting. Like, I can't do your taxes until you do your accounting. I know a lot of you guys might not know that Andrea also was a Liberty Tax franchisee. So she's not like, totally doesn't know about kind of the walk-in type of client, situation, right? So in general, like, client comes to you or even to other professionals, right? We talk about how a lot of us do things differently than each other, and there can be multiple right ways. Client doesn't have accounting. They have an entity return. How do you see that going?
Of course they have. And then we go into their QuickBooks and realize there are 800 transactions still sitting in the bank feed. So we reach out to the client to ask them, do you have a plan for getting your bookkeeping caught up? If not, would you like us to help you get your bookkeeping caught up? And so one of my bookkeeping managers is kind of on standby to do those like last minute cleanup projects. But the reality is if they don't have good bookkeeping, they're probably going to end up being put on extension so that we can devote time to really walking them through what needs to happen after tax season is over. If we have time before the March 15th deadline, we will get back to it. But odds are, if that return isn't ready to go, it's going to get put on extension. Their personal return will get put on extension, and then we'll revisit it probably starting in May. It's not ideal. And, there's always going to be clients who refuse to file an extension, or they think an extension is an audit flag, which we all know it's not. And so you may occasionally encounter a client who just absolutely refuses to approve an extension. Those are not, and I'm not a person who's just going to walk away from people. Like I'm not, my knee jerk reaction is not to fire clients because I am building a business here. But if they don't take my professional advice, which includes the best thing to do is to file an extension and here's why, then they're really not going to be a fit to work with us. So it's ever evolving.
Like a direct service line, right? So like, it's like a product that you do, and it's named out. This is what it is. It's it's kind of like doing your bookkeeping just to do your taxes type of thing. So like when we come to, and it's what's interesting about building this process document is it's almost like, it's like this conditional logic type of like fork in the road things, depending what your goal is as a professional. Because I could see, Andrea, I could see somebody having, I know that your goal of doing the accounting and the bookkeeping for all of your tax clients, I know that makes sense for like you and your team. And I think that makes great sense for your clients. So like strategically, I think that makes perfect sense. And then I can also see that another tax professional could have the total opposite goal, right? In terms of their strategy. And they could say, I don't want to do bookkeeping and accounting. I specifically don't want to do that. I just want to do the taxes. But then still, we need to be able to address that. If you choose to do that, how do you fulfill that in real life, right? And so if you have a cleanup option, like allied with somebody in this group, or, we got to be able to address that, because the reality is that the demand side of the market, there's so many new businesses, new entities, and so there's a lot of clients that really can be decent clients that haven't been doing their bookkeeping.
Yeah, I feel like this comes back to the power of community. And we've talked about that several times, especially in this group. If you are building a tax practice and you only want to do tax, that's wonderful. You can have an amazingly successful practice, and you can really build your life to where you're busy 4 months a year and you aren't as busy the rest of the year. So then it becomes really important to find professionals who are the opposite of you, who only want to do bookkeeping and don't want to touch tax. And then you can build a referral relationship. And that relationship can take a million different forms too. But if you reach out to people in your community who want to offer the services that complement your services, and you get to know each other, right? Clients, I feel better referring clients to somebody who I know, like, and trust, right? KLT, know, like, trust. And so taking the time to develop some of those relationships during the off season, so that by the time you get into tax season, you already have like 3 potential bookkeeper referrals. And when you're talking to those people, find out if they're willing to accept like emergency cleanups, like to be able to do those cleanups in January and February, or if they're going to have to do them after April, so that you can set the proper expectation for your clients and for your own capacity planning. But I mean, like you said, Andy, there's a million different ways to run your business. You can really build it to whatever you want it to be. But I do think that it's good to have a community of firm owners that you can refer people to, especially complementary services. I don't know, it's been a while. I think my very first tax season was tax only. And then I've had bookkeeping involved in my practice ever since. So it's been a long time since I've had to really worry about the tax prep side only. And so I'd love to hear feedback from other people, but I really just think if you can find somebody who you can trust to refer clients to for that bookkeeping piece, that can be a great solution. You can still, and then you can choose how you message that to the client, right? You can potentially make a relationship where that bookkeeper subcontracts with your firm, and so you present it as a one-stop shop for your clients, or you can present it as a true referral. I mean, there's so many different ways you could do this. But it is important, especially with S corporations, like even if they don't meet the requirement to need a Schedule L, you're still going to want to have that balance sheet figured out. Even if you're not including it in the copy to the client, or even if you're not filing it because it's not required, you're still going to want to build it in your software, because eventually the hope is that client will get big enough to need that balance sheet, and you're not going to want to be trying to figure that thing out 8 years down the road.
Yeah, so that's interesting you say that, because that was my next kind of avenue of exploration here, is that and I also wanted to add, as far as the outsourced bookkeeping, is that I do think that we need to build enough familiarity with the accounting side of it if we're going to be doing business returns, to where, like, I don't think we can completely outsource it to somebody because it's so interrelated with the tax return. So I think that a commitment to to enough accounting knowledge to be able to work effectively with somebody, because sometimes if you don't know enough about the bookkeeping or accounting, you can't even tell if that person's doing a good job or not. And at the end of the day, it may not be, outsourcing can even be less efficient and less productive if, there's not that knowledge base there. So with all that being said, so the reality is still going to be that there's going to be a lot of people that come in, a lot of clients, especially for people, especially for professionals that have a different business model than yours and are maybe like have more capacity even to take in newer type of clients and willingness, right? So specifically with the starting balance sheet. So let's say that somebody comes in, they've been having an entity for a number of years and they have not been doing the previous tax preparer has not been doing a balance sheet. This year, the balance sheet is going to be required. And this is what Payosha was kind of like really, it was good because it's actually challenging, like whether what I'm trying to build here is applicable to real life or is more like just a piece of paper, right? But it's like, okay, so client comes in, they haven't been doing their bookkeeping, they've been doing their taxes, they've been doing their S Corp taxes. What is the process that you would use to try to establish a beginning balance sheet for that situation? And let's say you don't have the option or maybe maybe the willingness to like go back and do all of their bookkeeping. Yeah. Is that doable, or how would you even think through that? How would you look at how would you try to figure out like the equity section of the balance sheet, for example? Does that make any sense, or just sound like okay? And so
I'm going to answer this from the perspective of a cash basis taxpayer, because an accrual basis taxpayer is a little more involved. And
let's forget about them.
Yeah, let's focus on cash basis. So I would start with the current year, right? So they're now your client. You're going to have to come up with the ending balance sheet items, right? The ending Schedule L.
Yep.
So you're going to get their December, assuming calendar year, you're going to get their December business bank account statements. You're going to get, if they have any loans, you're going to ask them if they have loans. They may say, yep, or no, I've never had loans. So now you already know the beginning balance sheet, there's not going to be anything in the liability section, right? Because they don't have any loans. Or they do have loans, and they should be able to go get that December 2023 statement and the December 2022 statement.
And so so 1 second here, Andrea. So am I going straight to the ending balance sheet, or am I trying to do something from the beginning balance sheet, do you think?
I start at the ending because that's the year you're working on now. And so they're a new client for you. So you're going to have to ask them if they have loans, what was their bank balance, right? You're going to have to get current year information so you can do the return. Yeah. And that can give you kind of an indicator of what you should be looking for in the beginning balances. For example, if a client says, no, I've never had loans, I pay cash for everything, you don't even have to waste your time trying to reconstruct the liability section. Okay. You know, if they were in business, they had a bank account, there should be a December bank statement. All you really need is that ending balance at 12/31/22, right? Okay. So then you have your beginning cash. So I start at the year that I'm working on, and then I work my way backwards. Otherwise, you could end up asking for a bunch of stuff that doesn't even apply.
Interesting. Okay. So it's like at the end of the year for which I'm preparing the tax return. So say I'm preparing a 2023 tax return. I see that the client is in this large category, having not done their accounting, not doing balance sheets in past year tax returns. I don't want to be a judgy person. I just want to like embrace them and just like go with them and walk with them.
They need help too, right? They're still a valuable client, maybe more. Like they need your help more probably than somebody who's actually organized.
Yeah, and it'd be interesting to talk about like how the pricing of the service would be could be adjusted based on that. So just from a technical point of view, I have that type of client, which I think we all could recognize and have encountered and probably struggled with, to this point. So I encounter this client. Instead of messing around with the beginning balance sheets for that year, I'm going to go straight to the 12/31 statements. I'm going to try to establish some kind of reality, like something reality based. I take their 12/31 bank statements. I take their 12/31 credit card statements or any other loans. It's like things that are actually real and actually exist. And then I put that in the ending balance sheet. Is that, do you think, like the best starting point? And do you also, would you recommend we do that before even like trying to enter in the profit and loss information and stuff into the return?
That's more of like a personal decision. I personally would like to try to recreate a balance sheet before I start preparing the return, but you could do the P&L portion first. You're going to have to go through the same steps either way. I like to try to have as much of the information fleshed out before I start entering in the return as I can. And they may not even have a good P&L, right? So you may be asking these balance sheet questions at the same time you're having the discussion, walking them through their income and expenses. So this could be just one big conversation that you have with this client. And I do think that this is a service you could charge for. What you're really doing here is a little bit of like annual bookkeeping, right? If you're having to recreate a balance sheet, you're doing a little bit of bookkeeping, at least a little bit. So there should be a charge for this, and how much that charge is up to you. It doesn't have to be thousands of dollars, right? It is a valuable service though, don't forget. But I would probably make this, like, I'm assuming this is a client, maybe they have a P&L, may not be super organized, maybe they have one, maybe they don't. So I'm having a whole conversation with them, trying to get all of the information that I need. And maybe it's a checklist, right? How much income? What are your expenses? Here are the categories. Did you have any loans? Did you own any equipment that cost more than $2,500? That gives me a sense of if I should expect to see assets. And at that answer, maybe it's, no, I don't. Everything has been, a printer. Or maybe it's, I didn't, but this year I did buy this. So then you know that there's no beginning balance for assets, but now there will be an ending balance for assets. So as you're asking these questions, you're actually getting information that's going to affect both the beginning and the ending.
Okay. So let's say for an example, and again, I want to kind of make sure that we're focused on the real life thing. So that's why I'm bringing up this form, just to try to kind of like see how we would be doing this in real life, right? So let's say we identify that we're on a planet of reality with the client in terms of like, here's your bank statement from your business. Here's your ending bank balance for the year that I'm trying to do this tax return. It's a real thing. You actually have a real bank account, et cetera, right? And you have a $10,000, let's say you have a $10,000 credit card balance at the end of the year. And let's say you don't have anything else. You don't have any other. So when it comes to the old, the accounting equation thing, right? It's like even I can see that this is not going to this is not balanced currently, right? And I'm feeling like, well, I don't really know how much you put into the business to start the business, and then I also don't know like what the retained earnings would be or how to handle these past things that have not been being done. So am I trying to just like kind of plug some stuff in, or am I trying to investigate and say like, hey, how do you tell me how you got started? How do you feel? How do you see that?
I generally would ask, how much did you put in the business bank account when you first opened it? I put $100. So, their initial capital contribution was $100. Some people put that on capital stock. Some people put it in additional paid in capital. Some people don't break it out and it's just included in retained earnings. This is not a course about where's necessarily a proper place to put that. But let's say we want to do it like you did and put it in additional paid in capital. We've already talked through. We know that there aren't any loans. There aren't like the bottom part of the balance sheet is now accurate according to the client. We know then that the difference must be retained earnings, because we've already talked through everything else. Everything else is zero. If assets have to equal liabilities plus equity, we know the liability is $10,000. Right now, we only have $100 in equity. The other $4,900 must be retained earnings. So it's kind of a process of elimination. Next time y'all see me in person, I'm going to have a t-shirt that says, the plug is always retained earnings.
Thank you for joining us. I'm Imelda. Join us next week as we continue to share mini audio clips of step-by-step S-Corp tax prep process. If you are interested in listening to the full process and want to be part of our Dream Team community, please visit prontotaxschool.com or email us to support@prontotaxschool.com. Being part of the Dream Team membership comes with getting expert support, top-rated training programs, and weekly video live events.